Recall in the last video that we had used the worksheet and we sorted all the accounts into the income statement that belong there. That is the revenue accounts and the expense accounts. And balance sheet, but nothing balanced because we have not closed. Remember, we opened up the revenue accounts as a temporary account to keep track of the revenue during that time period. We opened up the expenses. They were zero at the beginning of the time period, and these are the balances at the end of the time period. So now we have to close them back. We have to close them from the temporary accounts. We close the revenue accounts and the expense accounts and the dividends. They have served their purpose for this time period. They were zero at the beginning. We opened them up. We closed them at the end. And so therefore, what we do is we make a series of adjusting entries, or we call them closing entries. We make a new account. We have revenue accounts, expense accounts, dividends. What we do is we close the revenue and expense accounts to an income summary, and then we close the income summary to the retained earnings. That will be demonstrated. Okay, let's assume that looking back at our trial balance, we had service revenue credit in my records of $10,006. Well, look what I'm doing here. To close it, I am debiting it. You see, in my records, revenue has a $10,006 credit balance. By making this adjusting entry, I just make it for the purpose to close the revenue account. I'm going to debit revenue $10,600. So now you see it has a zero balance. And I'm going to credit this income summary. Income summary. Okay, and I'm going to credit it. So I've actually moved the credit $10,600 to the income summary. Now each expense account has a debit balance. Salary as expense has a debit of $5,200. Supplies expense or advertising supplies expense has a debit balance of $1,500. What I'm going to do is I'm going to credit each one of these and debit, that is, transfer them all over here to the debit side of income summary. So these all now have zero balances. For example, let's just take salaries. It would have had a debit balance of $5,200. But when I make this journal entry and I post it to the ledger card for salaries, I then get a credit in the salaries, equal debits, equal credits, so salaries has a zero balance. The same with each one of these expense accounts. And the total, 7740, has been moved over here. Now what I do is I close income summary. I say, oh look, I have credits of $10,600 and I have debits of $7,740. I need a further debit to close it. So I debit income summary $2,860. So they both have $10,600 on the debit side, $10,600 on the credit side, and I credit retained earnings. Remember, retained earnings is a credit balance account, so it's going to go up by $2,860. Now the last thing is dividends. Dividends too is a debit balance account. It has a debit balance of $500. Well, I credit it to make it zero, and I debit retained earnings. So you see, there's my retained earnings statement. Retained earnings beginning of the period, I forget what it was, say 10,000. Add net income, 2,860. Deduct dividends, and you got your new retained earnings. So that's the purpose of the adjusting entries, to close the books. Now these are just made up by the accountant to do specifically that. So when everything is posted, this is what it would look like in the ledger account. The purpose of post-closing trial balance is to prove the equality of the permanent account balances. That is, I bring up the retained earnings by that new amount. All temporary accounts will have a zero balance, and that completes it. So now my records are ready. The temporary accounts all have zero balances, so any revenue and expenses earned in the next accounting period will be in that accounting period. And this completes our accounting cycle. Remember, Chapter 1, we analyze business transactions. Then we journalize them. Then we post them and prepare the trial balance. Then in Chapter 3, we started the adjusting entries. We prepared an adjusted trial balance. Financial statements, which we took in Chapter 1, we prepared the income statement in good form, statement of retained earnings, and the balance sheet. Then we close them out and we prepare post-closing trial balance just to make sure everything is correct. And that completes this accounting cycle. We now start a new accounting cycle. So that takes us through the accounting cycle in this video. And the next videos we will then look at other entries.